Good morning, everybody. This is John Locke, and welcome to the Options Trading for Weekly Income update for June 2nd, 2014. Before we get going, I'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And please note we are using hypothetical computer simulated results and trades. Therefore, actual results may vary. So let's move forward. If you're watching this on YouTube or some other venue, check out our programs and our website at www.lockeinyoursuccess.com. We got the M3 Bearish Butterfly Rock Group Coaching Trading Triangle Program, and now the M21. For those of you who missed the M21 webinar on Thursday, please, what I'll do is I'll post the link in the comments on the video or in the blog, so that you can go ahead and go back and take a look at that. There's a really special purchase going on in all the programs. Whether you want the M3 Bearish Butterfly, Rock, or M21, you would want to contact SMB for that. Here is the link, special purpose link for the combined programs if anybody is interested. Also, make sure you join our mailing list, get the free report, 7 Secrets to Become a Successful Trader, and sign up for this weekly webinar. All right, let's take a look at what's going on in the markets. If you remember, last week we did just a recorded update, and we were saying that the most likely move for the markets was going to be that the Dow was going to reach for all-time highs. So if we come over to the Dow, let's give us a little bit of a delay here. Apologize for that. Well, I guess the charts aren't going to be working for us this week, so I'll do the best I can. While this is coming up, let's just kind of take a look at what the positions did last week. We had a June V condor. We did no adjustments to the June V condor. Here's what the position looks like. Let's just kind of stick up our analyzed graph. And we plan on expiring this at $2,600, so no big deal there. Nothing really happening with that. If we take a look at the June Bearish Butterfly, we got some interesting things going on last week. So if we come back to Tuesday morning, what we had going on is, let's kind of here, June Bearish Butterfly. We were just sitting in a single 1100 butterfly and looked like this. Things were looking nice as of last week. Of course, we had this nice, strong move in the markets on Tuesday. And that being the case, what we ended up doing, we had a delta theta problem here, or a maximum delta problem. I don't remember which. Let's see. We actually have a delta theta issue going on. Before we had our roll point at 1140. So per guidelines, we rolled up to 1120. We added the 1140. Ended up looking like this by the afternoon. We rolled up to 1120, had the 1140. This was a move on the 27th in the T-log. Rolled those up, and this was our position at the end of the day on Tuesday. From there were no further adjustments. Nothing else needed to happen. So what we end up doing is closing this on Friday as per our reduced profit target guidelines. So if we come to Friday at 1400, here's what the position looked like. At that point, we're pretty much in the center of the graph. We hit our reduced profit guidelines. So we went ahead and closed this out, and it closed out for a profit of about 6,800, I believe. The number was 6,840, 13.7% on planned capital of $50,000, which made for a nice trade for the Bearish Butterfly. If we come on over to what's going on with the M3, we had an adjustment on this Tuesday as well, Tuesday morning. If we go to the June M3, this is the position we were in. We were essentially in 1080 butterfly with 10, 1080, 1090 verticals, and we had one 1090 call on. Here's what the position looked like at the beginning of the week. Obviously, we're getting more than 10 points over our long strikes here. This is typically when we're going to go ahead and adjust this. So I came in here Tuesday, and essentially I rolled everything up 20 points. So if you come to the, and I'll show you this, just a T-log adjustment here, just if you want to take a look at this later. But essentially what we did is we used condor orders to bring this to an 11, from a 1080 to an 1100 butterfly, and add some vertical spreads in here. We just did that in 2 orders, and it looked like this at the end of the day. You can see now we're up here at 1100, like as if we had 1100 butterflies with 10, 1100, 1110 verticals. Our delta's a little bit high actually, but I think this is just after closing delta, because when we did it, it wasn't that bad. And here's what the position looked like as of close on Tuesday. And running forward, let's see, we made another adjustment here on, looks like on Thursday. So let's pull up to Thursday. Okay, are we, I guess we're having internet issues or something this morning because we're a little slow. All right, so as of right now, the screen should be updating to Thursday, May 29th. All right, are we updated to Thursday? Okay, excellent, excellent. Okay, so Thursday just popped in. This is Thursday morning. This is what our M3 position looked like. We were pushing, by the end of the day, we're pushing a little bit high on delta, so let me just push to the end of the day. What I did is I added 5, 11, 10, 11, 20 verticals. We are near the edge of the 10th, so I like to keep the delta down to around minus 50 at this point. So this is what we did on Thursday. We put these verticals in here. The position was up 2,300 as of Thursday. No further adjustments till Friday, so we'll push it to Friday. And here we are up about 2,900. Delta's a little bit higher than I'd like, but we're inside the tent here, so I don't mind going to like minus 75, sometimes minus 100 in here, this far inside the tent. So this is what the position looked like as of Thursday, Friday afternoon. All right, let's take a look at the rock trade. Actually, let's go to Tuesday morning, or early Tuesday afternoon. If you remember on the rock trade, we were actually in an M3 position because we started in that position. We started way back here at the 1070 shorts, and we had some verticals in here, nice flat T plus 0 line, and of course the market took off on the upside. And usually what happens when what we call outrun an M3 position when we're in a rock trade, what we're going to do is we're going to come in and we're going to convert this over to a rock trade if the delta requirements allow that. So I redid my delta check here before I made an adjustment, and found out that I could go into a normal rock position, so that's what I did with this position here. So if you come to the end of the day, you'll see I went from having 1070 butterflies to going all the way up to an 1120, set of 10 of 1120 butterflies on the puts, and I added in my 1160 butterflies on the calls. Only did 4 of them because 5 of them would have put my delta a little bit flatter than I would like. And I believe that is the only, that's the only adjustment made to this. So now we're actually in a rock position, and we're down slightly after the transition. So if we come to Friday, towards the end of the day, what we're going to have here is we're showing up about $3,000 at 3:30, I'm sorry. And here's what the position looked like as of the end of the day, Friday. So everything's going well with all the June trades. We have a closed bearish butterfly. We have a rock trade that was adjusted back actually into rock position. First time in a couple of months because the market's been flat enough to do that. We have Bearish Butterfly that's been closed at a profit, and we have the M3 that's doing well. It's up about half its profit target. And that's it for what we have for June. Let's take a look at what we got going on for July. The July V calendar did not have any adjustments. Come up here. Positions up about $1,000. We're at minus 67 delta. We had the up move. We got to about minus 91, but we did not have a reason to actually make an adjustment here. And this is the current position. And the last trade that we have open is actually the July Bearish Butterfly, which is the only trade that's actually down money right now. And for the adjustment on Tuesday, back on Tuesday, we added in the 1120 Butterfly. And here's what the position looks like now with 10, 1100s, 10, 1120s. Our next adjustment point, if the market does continue up, is likely going to be a roll of the 1100s to 1140. Then if we go high enough, we'll probably be adding the 1160s. But that's what we're looking at for adjustments there. Here's what the position currently looks like. Slightly down, but no big deal at all. And that's all I have for positions. Let's see if we can actually get the toss charts working. Okay, so here we are. We're actually on the SPX. Let's go to the Dow. Hey, there we go. All right, so last week we were down here. We said the Dow was at a resistance point, but it's more than likely it was going to head up and try to reach for all-time highs, which is pretty much what it did last week. Because of where the SPX was at the time, the SPX was essentially at all-time highs last week, and we were saying that if the Dow reaches for that, then it's definitely going to break the SPX out. I wouldn't take that as an indication necessarily that the market was going to go higher, but that's what it did. So apparently the charts still are not updating. Let me see if I can manually put in the Russell. See if it'll do that. All right, so it looks like if I manually put them in, they'll go in. So it must be a problem with Thinkorswim. Let me just type in SPX. There we go. So we were saying that if the Russell was very likely to break out, or this was the most likely scenario, the Russell was going to break out, it was going to break the SPX out, it was going to bring the NASDAQ to resistance, and, which it did, and it was going to bring the Russell up, what I figured was about 1130 or so. We end up going up to about 1144, and then we back down a little bit later in the week. So the SPX, the Dow, the NDX are reacting exactly as planned. The Russell's, it's a little bit stronger, but the Russell's been kind of a rogue index lately anyway. And we're still kind of in this sideways range where we're not up, we're not down. Where I was thinking the market was going to go from here is that the Dow was actually going to pull back down into range. The NASDAQ was going to pull back down into this range here. And the SPX would probably, oh, I forgot, okay. The SPX would probably at least reset into here. I think it's actually going to probably make this a failed breakout like it was with the Dow, but we're not going to get a really huge move down, maybe, just to here. And that was going to bring the Russell for one more cycle, down into this range here, around the 1100 range. That's what I think is most likely going to happen. What's going to change my opinion is obviously if the Dow breaks or closes at new highs, and that's going to cause the NDX to break out and a further extension in the SPX. So if that's the case, we're going to get a really rapid move to 1160-ish here, and we'll probably back off from that level and then break out. If that happens, I think the more likely scenario is that the Dow and SPX and the NASDAQ back off this week, and we're down for the week. So that's my opinion on the market. Those are the positions. Are there any questions that anybody would like to answer? Okay, so here's one is lately I've been seeing some big differences in market prices and option view theoretical prices. All right, so I have a specific, one of the things that happened with OptionView, and I should mention this, is that they came up with an update that changed their default settings. So you'll want to go back in and check your settings for OptionView. For the trades we're doing on OptionView, I'll show it here. For the trades we're doing on OptionView, we're using this model, Yates, True Delta Gamma, in units of currency, and we are combining call put skews. I have a disagreement with OptionView whether we should use these or not, but I can tell you that doing these types of positions on the Russell Index and on the SPX using combined call put skews gives you a much better reading of what's going on. So I would come in, check your model, make sure that this is checked off. That's going to give you a big difference in what your T+0 line does. It makes it act more like Thinkorswim. And it's just not correct. So you'll need to come in and do that. That may be part of it. The other thing is, yeah, I mean, sometimes your theoretical and your actual prices are way off. I don't worry about it a whole lot, but these are the model settings that you use. Let's see. Is there any other questions coming in today? No? Okay, nice quiet day. All right, so one of the things, again, I urge you, if you're interested in any of the programs, SMB's having a really good deal on all the programs this week. If you bought something before, they work some special deal with you, so just give them a call. Other than that, I guess we're all set. So thank you for coming, everybody, and we'll talk to you next week.